Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently December 4th. What the heck happened with gold? Look at this daily chart candle. Is that not one of the most epic reversal candles that you have ever seen? To me, it absolutely is. So what does this mean? Why did gold spike and make a new all-time high in the overnight futures and get absolutely reversed? You can see here, major pivot, major pivot, major pivot. This was a triple top that got absolutely shattered and then reversed. The gold bulls celebrated momentarily before price action just absolutely cratered and caved back to the downside. Not only did it cave on the daily chart, but you completely engulfed the last 1, 2, 3 daily chart candles. That is not a good sign. That likely means there's going to be more downside. Now, I am bullish on gold long term, but I think within the next few weeks there could be some very choppy price action ahead for gold, and it's also depicted in the miners. But with this daily chart candle, where's the next big support? Well, you're probably going to retrace back to the breakout zone. So this down sloping trend line pivot to pivot is probably where gold is going to go. It also happens to confluence with a major parallel channel, and I can actually draw this channel in. Just I had it a little bit muted, but the retrace to the breakout zone in gold. Let me just fix my cursor here. Sorry, my mouse is acting up. But if you look at gold, and we look at this area, you have a dual factor confluence, the parallel channel that's been keeping gold's uptrend for quite a long time, as well as the breakout trend line. That's where you likely will get a bounce. Now, with this epic reversal, it's probably going to take some time to work these sellers out of gold. I would anticipate we need a lot of backing and filling sideways chop to continue higher. And I was never a big proponent of gold breaking out and making new all-time highs off of this move because I thought it was too extended. But it did break out. It made new all-time highs, but it has not held that breakout. This could be a failed breakout. Now, one thing we have to watch out for is what the US dollar does. If inflation expectations suddenly go up or we get a hawkish Fed, Powell could actually send gold all the way back down to the lowercase channel. That's not my base case, but one of the reasons why I think gold has a plausible chance heading back down to this lower channel is simply if we look at the GDX, and you always want to see miners leading the price action of gold. Did miners make a new all-time high? They did not. Why are they lagging the price action of gold so precipitously? Well, we might find out, but first things first, if we look at GDX here, GDX has had the tailwinds of weaker oil and it's had the tailwinds of higher gold price, but yet it's not really making new all-time highs like gold is. Well, a couple of reasons this might be. We have this head and shoulders on the daily chart. It's a big one that has triggered but not yet quite played its downside move. So we could be seeing more downside move in the miners. If we do a measured move of this downside pattern, where we broke, it could send GDX all the way back down to the $20 range. That would absolutely be a buy. Now, what have the GDX done? The GDX has now retraced this major trend line where it got rejected here. It just got rejected again on heavy volume. So with this rejection, it's now done a clean retrace back to the head and shoulders neckline where it could be poised to seeing more downside. Remember, the fully measured move downside takes you all the way down to 2083. That doesn't necessarily mean it's going to play out. But another pattern that we have to watch out for on the bullish side, why this is such a difficult time to trade, is because you're seeing bearish and bullish price action all over the place. On the bullish side of gold or GDX miners, you have this beautiful inverted head and shoulders that has broken out on the daily chart by clearing this flat top neckline and getting it confirmed. Now, there's a strong chance we retrace to this basically breakout neckline. If the bulls can hold above that, we should trend higher. But you start getting a daily close below this key neckline, and this pattern, this inverted head and shoulders, could turn from bullish to a failed bullish pattern. And we all know from failed bullish patterns come big moves to the downside. So if this pattern and support level holds at this 3014 area, you could have a move all the way up to 3450. But If this GDX doesn't hold and we get a daily close below this, then you could see a bigger move to the downside, and you could see the bearish pattern over here, this head and shoulders, take hold once again. So I'm just seeing too much of a divergence from the actual gold price and the miner price. And then you throw in another factor. Let's look at silver. What happened with silver? Look at that freaking candle. Holy moly. What a bearish engulfing candle on silver. Definitely not one, if you're bullish on silver, that you would like to see. If we look at the weekly chart on silver, silver tried breaking out from this pivot to this pivot, got a little bit of a peekaboo breakout, and it got absolutely hammered and rejected. One daily candle racing 1, 2, 3, 4 days of price action, almost 5 days of price action. You'll have some near-term support back at this downsloping trend line. You can even draw it a little bit lower so it connects through these pivots as well as this pivot, as well as this consolidation breakout. If you get a retrace on silver back to here, it could be bought for a quick bounce. As for that, we're going to have to reassess as to how low silver can actually go. But if you start losing this breakout zone over here, silver's next support is going to be this upsloping trend line. So it's quite a big difference that silver, could. If it loses support, we're going lower. If it holds support, we're likely going to go higher. I have my thesis around both, but again, it's never a good sign when you have the actual underlying commodities starting to lag or starting to gain footing ahead of the miners. It's showing us that speculation is not really believing the price action in gold and miners. Please give this video a big like down below if you found it helpful. If you disagree or agree with anything, be sure to leave a comment as well. Stay tuned for more insights. You can definitely check out my website at tradingcapital.ca, where I post a whole host of information, track insider buying and selling. You can gain access to my Discord, where I take entries and exits for all my positions. And thank you all for tuning in. We'll see you on the charts tomorrow.